Right. So good morning to everybody. Good morning to everybody. For those that I've never taught before, my name is Dr. Joshua Aura. I'm the principal at RCM College, and I teach QA. I teach management accounting. I teach advanced management accounting, advanced financial management, BDA at RCM College. All right. So of course, all my classes, what I normally do is to put my video at the very beginning, and then I will be able to switch it off. And then again, when I'm saying bye-bye, I will be able to do what here. I will be able to, open up the video for you to be able to see your money. Otherwise, most of the times, we close it up so that you guys can get the best experience. So that you guys can get the best experience in terms of what you are able to see. All right, Maurice, I can see you there, Maurice. Maurice, the numbers here are not very, very good. When we're around Maurice, I should get better numbers. So go somewhere there, write that in that message, say the class is ongoing, join now, and share it intensively. All right. So then, ladies and gentlemen, here we are. Yeah, let me just bring up this paper that we shall be discussing today. Wait. Ladies and gentlemen, this is really what we are doing here today. This is QA April 2026 paper, the paper that was done last semester. And I would want us to start with this question here. I would want us to start with question number 1, last semester's paper. Question number 1, cow. Question number 1, cow. A medium-sized manufacturing company based in Nairobi produces bottled fruit juice for the local and regional market in Kenya, Uganda, this one here. Here, a medium-sized manufacturing company based in Nairobi produces bottled fruit juice for the local and regional market in Kenya, Uganda, and Tanzania. The firm operates in a competitive market, but it's price-sensitive market where demand is influenced by consumer income and availability of substitutes such as carbonated drinks. Market research conducted by the firm indicates that the demand for its product is given by, so they have given us a demand, where P is the price and the Q is the number of units produced and sold per day. The firm's cost structure reflects a high fixed cost due to machinery licensing and the compliance with the Bureau of Standards, as well as variable costs such as raw materials, labor, and electricity. The total cost function is given as follows. Total cost, due to space limitations and machinery capacity, the firm can produce a maximum of 15,000 units per day. So they want us to determine the firm's profit maximizing level of output and price. Compute the level of profit at this level of output, advise management on whether producing at the profit maximizing output is feasible or practical given the firm's production OTM capacity. Now, my very good students, please listen and listen to me very, very well. Please listen and listen to me very well. I would want us in this case here, so remember we are looking at QA. This is QA. I want this to be QA, sorry for that. This shall be a, yeah. All right, ladies and gentlemen, you'll have to allow me. This question needed us to use differentiation. This question wanted us to use differentiation. And because they want us to use differentiation, I would want to do just a very brief introduction here of calculus. If you allow me, I would want to do a very brief introduction of what we call calculus. In just 5 minutes, what is really calculus? In just 5 minutes. And then I'll be able to go back and do this question. Now, with your permission, first of all, I would want confirmation that you guys are able to see my screen. Are you able to see my screen, ladies and gentlemen? Are you able to see my screen? Please talk to me. I would want that confirmation. Yes. Thank you very much. 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 And I can see you at 37, which is really, really good. Which is really, really good. Really, thank you so much for that. Thank you so much. So then allow me to take you through what we call calculus. So tell us there that calculus is a branch of mathematics, used to study rates of change, and accumulation. So rates of change, this one here will be differentiation, and then accumulation will be integration. Accumulation will be integration. So we look at differentiation first. So the meaning, so differentiation measures the rate of change. Of one variable with respect to another. And I hope you guys are able to take your notes as I'm writing. I hope you are able to take your notes. It's important. So it is used to measure the rate of change of one variable with respect to another. So basically, when we talk of rates of change, we mean gradient. And if you remember very well, gradient is normally obtained by you taking change in y all over change in who? Change in y all over change in x. Change in y all over change in x. However, for differentiation purposes, we normally say gradient will be dy over dx. So gradient is dy over dx. Ladies and gentlemen, look at the formula. Differentiation formula. So if you're given here y equals ax raised to power n, you're given y equals ax raised to power n. To get dy over dx, drop the power down. So we have what we call nux, like that. That's the first thing you do. You drop the power down. We have n down there, so nux, and then raised to the old power minus 1. Raised to the old power minus 1. This is the rule of differentiation. Rule of differentiation. All right? So then from this rule, I would want us to look at exercises. So number 1, if you are given like 5x raised to power 3, and then somebody tells you to differentiate to get dy over dx, how will our dy over dx look like? How will our dy over dx look like? And ladies and gentlemen, remember, this is Dr. Joshua out of RCM, who teaches QA at RCM. I would want to welcome all of you to study at RCM. RCM is the home of one-term passes. One-term passes. First attempt, you pass all your papers at RCM. If you're interested in joining our classes, our number is 0793 555 000. 0793 555 000. So as we said, come and drop these 3 down. So 3 times 5, that is 15. X raised to a new power. How do we get a new power? You take the old power, you take away 1. So then this one will be 15 x raised to power 2 like that. 15 x raised to power 2 like that. Now, my very good students, please listen and listen to me very well here. I would want to make myself very, very clear. So we have here function, very important as a note. Function, and then we have in this case here dy over dx. This dy over dx, at times we call it a derivative. At times we call it a derivative. At times we call it a derivative. So function versus so function. So if, for example, you are given c, remember c is a constant. C is a constant. So if you're told to differentiate a constant, you'll always get a 0. Very important. If you're told to differentiate a constant, you'll always get a 0. A 0. If you're told to differentiate, let me write this properly. If you're told here to get, let me write this properly. Sorry for that. Yeah. So if you're told here to get dy over dx, for constants will always disappear whenever they are differentiated. So this is number 1. How about number 2? Well, you are told in this case here, you have a term like ax. And then they tell you to get dy over dx. So dy over dx, how will this look like? Well, the way it is here, it has a 1, which is implied. This one will come down, times ax, raised to 1 minus 1 from the formula. Then this one here will be 1a x raised to 0. X raised to 0. And you and I, we happen to be knowing that anytime you have any letter or number raised to 0, it shall be exactly equal to 1. So basically, this one is same as saying, 1 times a times x raised to 0 is 1. So basically, this one here will end up giving us what here? A, like that. This will end up giving us a. Allow me to simplify this, my very good students. Please listen and listen to me very well. So when you are given this a, x like that, and you are told here to do what? To differentiate it. You are told to differentiate it. If I'm the one doing this, I know there is a 1, which is implied, a hidden 1. So I will bring this 1 down. I will get a. And then I have x raised to a new power. How do we get this new power? Old power minus 1. Old power minus 1, that gives me x raised to 0. X raised to 0. So if it is x raised to 0, I would rather not write it. So that is the final answer. Now, my very good students, number 3, lastly, is simply the formula I've given you. Ax raised to power n. If you're told to differentiate this ax raised to power n, dy over dx, how shall this look like? Remember, n comes down. So this gives us knocks like that. N comes down. So this gives us knocks like that. Raised to a new power. How do we get this new power? It will be n minus 1 like that. So really, the moment you understand this note, we shall never ever have any problem with differentiation, ever. So I would want, in this case here, to get feedback from you. So far, are you able to follow what Mwalimu is doing? So far, are you able to follow what Mwalimu is doing? Are you able to follow what Mwalimu is doing? Maureen says yes. All right. I wish I would get feedback from most of you. Carmel, Christine, thank you so much. And of course, if you've got any question, do not hesitate asking these Chief Ninja questions. I always love answering questions. Now, my very good students, I would want in this case here, we look at a bigger exercise that I would want you to try on your own. Y equals 10x raised to the power 6 plus 50x plus 100. Are you able to give me the differentiation of this? dy over dx of this. 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 The last part, remember n is going down, right? The formula. N goes down when you differentiate, it is na. X raised to a new power. How do we get new power? You take the old power minus 1. Yeah, that is a differentiation formula. Then I will also be able to apply here. So now remember here, I have many terms. I'm going to differentiate one term at a time. We shall differentiate one term at a time. It's just somebody who already happens to be having a figure, or rather answers here. Your class has over 180 students. So when I see 42, I'm 100% sure that there are students here who are not doing their work of sharing, their work of inviting their colleagues. Thank you so much, Neo. Thank you, Goretti. So you see, this 6 comes down. 6 knocks on the 10. So it gives us 60. X raised to a new power. How do we get new power? We take the old power, which is 6 minus 1, which will give us 5. Plus, you see, this one has an implied 1. There is a hidden 1 there. So when I take this 1 down, it will be 50 x raised to a new power, the new power being 0 because of 1 minus 1. And x raised to 0, x raised to 0, I would rather not write that one because any letter or number raised to 0 will be 1. That will be akin to saying 50 times 1. Plus this 100, which is a constant, when differentiated, constants always do what here? Constants always disappear. Now, ladies and gentlemen, please listen and listen to me very well. When we come to the applications of differentiation, when we come to the applications of differentiation in business. Now, we normally use number 1, differentiation for optimization purposes. Optimization. So basically, optimization is all about calculations of productivity quantities, yeah, to maximize. So, about talk of A, to maximize profits. To maximize profits. B, to minimize what here? To minimize costs. Yeah. So calculation of productivity quantities. Yeah. Productivity, want to be productive. To be productive, in this particular case, for this optimization theory, we are either maximizing profits or minimizing costs. All right? We are either maximizing profits or minimizing costs. Now, allow me to explain something, ladies and gentlemen, here. In terms of profits, here, don't also talk of maximizing revenues, but in most cases, for optimization theory, we are maximizing profits, we are maximizing what here? Cost. Ladies and gentlemen, if you are to start your business today, this business will behave like this. So if these are profits, it will behave like this. So we have negative here. All right. So in this case, of course, you can't start a business from a profit area. No. You start from negative as you sell. This is quantity. As you sell, the profit diminishes. You hit a level where profit is zero. This level here. This level where profit is zero is what we call break-even point. Break-even point. So I reiterate the fact that at a break-even point, profit equals who? Profit equals zero. At a break-even point, profit equals zero. So you hit that point. Then, of course, you continue with the journey. Now your profit is going up. But you see, ladies and gentlemen, you can never enjoy profits forever. Just like a human being, right now in this case here, you are quite active because most of you are in your 20s. In your 30s, you'll still be very, very active. 40s, still very, very active. But by the time you hit, in this case here, say 50 years, chances are your productivity will start going down. It's called life cycle. Life cycle. Yeah, there's birth, there is maturity, there is in this case here decline. No, first of all, birth, growth, maturity. After maturity, you can only go there. The same case with products. All right. So then, as a business person, it is very important for you to know which quantity is this which is going to correspond to maximum profit. Maximum profit. Which quantity is this that I shall be able to sell to be able to get maximum profit? It's always very important for you to do that. Now, ladies and gentlemen, please listen to me and listen to me very well. You can see up there that at maximum profit, we have what we call a flat line. This line here is flat. At maximum profit, this line, if I was to use a ruler, this maximum profit line, you can see it is touching this very apex area. Yeah. And if I take this point plus this maximum, join them, it will be a flat line. That is what we call point of tangency. Point of tangency. Point of tangency, like that. A tangent. The most important thing at this level, nobody will ask you about this. It is just important for us to appreciate that at the maximum profit, the maximum profit line will be flat. And when it is a flat line, it means that no gradient or zero gradient, or we have what we are calling zero what here? Zero gradient. i.e., we are writing there, my friends, i.e., at maximum profit. Yeah, d profit over dx should be equal to 0. Remember this pi doesn't stand for 22 over 7, doesn't stand for 3.14, the figures you used to work with in high school. For us, pi stands for a great thing called profit. Pi stands for a great thing called profit. So you're saying at maximum profit, remember this is how we get gradient. Change in gradient equals what here? Equals 0. Gradient equals 0. Now, my very good students, please listen to me very well, because I want you to become experts in whatever that you shall be doing out there. As RCM students, I want you to shine outside there in whatever that you shall be doing. Now, please listen. Now, my very good students, if I'm told to maximize, so steps for maximizing profit. Like last semester, they gave us this question. Number one, ascertain. I slide back. Okay, sorry. Okay. Once you're okay, Caramel, please give me a thumbs up or a Y for me to continue, and thanks for making me to stop. I love students who ask questions. They came here simply to understand things. They want to learn. And at the end of the day, such students also make mwalimu learn as well, because I'm also here to learn from you. It's a learning environment. It's a learning environment. It's a learning environment. It's a learning environment. So now I'm waiting for you. Give me a Y. Okay. So then we shall be able to introduce recordings done by Dr. Aura here on the learning management system. We haven't yet started uploading them, but if really you make those kind of requests, it will be very important for us to do what you have to have those classes uploaded. If you think they will be helpful, it's important for us to have them. So she's saying, great, we can continue. So number one, tips for maximizing profit. Yeah, so what do we have there? Ascertain the revenue function. That's number one. Number two, ascertain the cost function. Number three, develop profit function. How do we get this profit? Profit is revenue minus cost. So this is revenue without cost, like that. Number four, differentiate the profit function. Differentiate the profit function and equate it to 0, because the gradient at the very top, is always 0, like that. So please write this, and after you finish writing, put a tick there for me by saying Y for yes. Y for yes. And you mean, great students of mine, we cannot hit 100 and you guys are chief marketers? You mean we can't hit 100? We shall be able to hit 100, really. Yes, we shall be able to hit 100. I believe so. I believe so. Point number two is to ascertain the cost function. Ascertain the cost function. Ascertain the cost function. All right. So how do we hit 100 as we continue to hit 100? Then I would expect you, great students of mine, to share the link. Tell great ninjas there that, hey, here we are having one of the very best classes. Yeah. So then, very good students, we come back here. And get our question here. That's our question. So you see, now here, they want us to determine the firm's profit maximizing level of output and the price to charge. So I have this price, 120 minus 0.5, and I have total cost given there. So I'll work with these two. I will work with this, I will work with that. So please write them down. Write those two down. Those two functions are very, very important. Write them down. Write them down. Write those two functions down nicely. Yeah. I'm so sure you have already done that. And if that is the case, then I will be able to continue. If that is the case, we shall be able to continue there. Ladies and gentlemen, we have written down that. So we shall be able to continue here. So then what we have, my friends, here, so we have price was 120.5 Q. So step number 1, determine revenue. Determine revenue. So in this particular case, they have given me price. See, if a pen goes for 10 bob from your shop, a pen from your shop goes for 10 bob, and then somebody comes and buys 5 pens, the total money you will give you will be the revenue. It will be 10 times 5. So our revenue function, which is our R will be equal to price times quantity sold. That's how we get revenue. So then our revenue will be equal to price, which is 120 minus 0.5 Q. Then I multiply this with the quantity sold, which I do not know as of now yet. So that is the revenue function. I can go ahead and distribute this Q inside. So our R will be 120Q minus 0.5 Q squared, because I'm multiplying this here and I'm multiplying it here as well. That is the revenue function. That's number 1. Number 2, ascertain total cost, which I'll be abbreviating as C. And unfortunately, the cost, total cost there, you can call it TC or cost, has been given to us as 3,000 plus 30Q plus 0.1 Q squared. I told you to copy the 2. The total cost has been given there very well. Number 3, third step, develop profit function. So remember, profit is pi. And for us to get pi, we take revenue minus cost. Fortunately, our revenue already we have it. 120Q minus 0.5Q squared. So you must put those respective functions in their own brackets. If you don't put them in their own brackets, you will get a 0. So this is independent revenue function, independent cost function. You put it in its brackets like that. Plus 0.1, you put them in their respective brackets. Then go ahead and get this profit. So this profit, so we are opening brackets here. So when you open brackets, so we have 120Q minus 0.5Q squared. You see, when you're opening brackets, you must be cognizant of the sign that is in front. Like now here we have a positive, implied positive sign there, which is weak. It cannot change the signs inside here. So it will be, the signs there will remain. So 120Q minus 0.5Q squared minus 3,000, right? Minus 30Q, right? Minus 0.1 Q squared like that. See, this minus is very, very powerful. Whenever you have a minus pili. Whenever you have a minus in front of this, it will be minus like that. It will change. Initially, this was positive, it becomes negative. Positivity becomes negative. Positivity becomes negative like that. From there, we shall put together those terms that love each other, the lovers. Like now we have this Q and this Q. So this is 120Q minus 30Q. That will give us 90Q. Like that. So this Q squared, those are lovers. So we have here minus 0.5, minus 0.1, minus 0.5, minus 0.1. That will give us minus 0.6 what here, Q squared, like that. You see this minus 0.5, you're using your calculator, minus 0.5, minus 0.1. That will give us minus 0.6 Q squared. So this one does not have a lover, you bring it with a sign. So this is minus 3,000 like that. So let me get feedback or any questions. If there is anybody who has a question, please feel free to ask. Thank you so much. I can see now we have 50. Really, that is really good. That is really, really good. So please, if you have any questions, do not hesitate asking. And we are here to learn straight away here. I don't want somebody to write notes to go and understand them later. That's not how I teach. No, we're here to learn now. So now we have the profit equation. Now from there, number 4, ladies and gentlemen, what we need to do, number 4, do we rearrange the equation? No, it shall be left like that. It shall be left like that. I know in high school we used to rearrange them to start with the q squared. No, here we just leave it like that because at this level, we can comprehend the equation the way it is. Yeah, so number 4, ladies and gentlemen, we differentiate the profit because now you want to maximize it. Take it to the hill up there. Yeah, the tangency thing. So differentiate profit function because they want us to maximize. So then d profit over dq. Are you able to differentiate this on my behalf? Which question are we doing? This is question number 1c over April 2026. The last semester's question. Question number 1. Last semester, the profit over dq. So remember, we also sell revision kits, very nice revision kits. At just Kenya shillings 1,000, we shall be able to ship this revision kit to you. They have questions and answers. So I want to see whether there is anybody who will be able to differentiate this function for me with respect to q. Just one student. Just one student. Also remember, for the students who may be having fees challenges, RCM has partnered with the HELB Foundation. HELB Foundation to give our students loans. Of course, for you to be in current class, you must have paid your fees, but now you apply for your future classes. Those loans are very, very nice. I'm not getting anybody really who has been able to differentiate this for me. 90 minus 1.2 QHK. Thank you so much. Still unable to access LMS, Marion. Okay, I'll be able to address the issue. All right. So when you differentiate these, you see there is an implied raised to 1. Yeah. So when this 1 comes down, it gives me 90q raised to a new power. How do we get new power? Old power minus 1. Q raised to 0. I will be better off not writing that q, because q raised to 0 is 1. Minus, so the 2 comes down. So that gives me 1.2. That gives me 1.2 what here? 1.2q. This is what we call a constant. And the constants, ladies and gentlemen, upon differentiation, they disappear. Constants do not have any gradient. If you try plotting a constant like 3,000, it will have a flat line. Constants don't have any gradient. So now remember, the gradient at this maximum point, the gradient equals 0. You differentiate and equate to 0. You differentiate and equate to 0. Differentiate and equate to 0. So then this one here will be minus 1.2q equals minus 90. Yeah, so q will be minus 90 over minus 1.2, which will end up giving me what figure, ladies and gentlemen? Minus 90 all over minus 1.2, which will end up giving me what figure, ladies and gentlemen, here? So Mamu gives me a figure of 75 units like that. 75 units like that. Thank you so much. 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 Now, my very good student. Yeah. No, that is what we call first order condition. Then we have what we call second order condition. For us, once you reach here, you are okay. You'll be able to get all the marks. So that is method number 1. Method number 1. So to be able to maximize profit, sell 75 units. Go back to the question. if you go back to this very question that they asked us, always you shall read the question severally. If you go back to the question that they asked us to determine the firm's profit maximizing level of output and the price. Then we need to come here and give them the price. Fortunately, then what is the price here? Fortunately, we have the price function. Have it. It is here. Price is 120 minus 0.5 Q. And now we know the profit maximizing quantity, don't we? We know it. So our price will be 120 minus 0.5 Q, and the Q is 75. So is there somebody who can give me the final answer? Is there anybody who can give me the final answer there? P will be 120 minus 0.5 times 75. So I'm being given by Mamu, Kenya shillings 82.5, like that. That's method number one. Method number one. Method number two. So we have here method two. So method two, ladies and gentlemen, what we have over there are my very, very good students. Method two is the economics method. Economics method. So, and the economics method, we know that at maximum profit, marginal revenue equals marginal cost. And then remember that marginals are gradient functions. Marginals are who? Gradient functions. These are gradient functions. Marginals are gradient functions. i.e., to get marginal revenue, differentiate the revenue. Let me write here. i.e., marginal revenue, differentiate revenue function. Differentiate revenue function. That is marginal revenue. Differentiate revenue function. Differentiate revenue function. Differentiate revenue function. All right. So meaning that to get marginal revenue, you will take dr over dx or over dq. Dr over dq. This is number one. How about number two? MC, differentiate cost function, i.e. MC equals change in cost all over change in Q or all over change in X, like that. So you see, like in our case here, ladies and gentlemen, please listen. But first of all, before I continue, have you been able to write up to here? Have you been able to write up to here? And whoa, wow, we are 56. I'm seeing us going to 100. We are 56. The newcomers, welcome. We are doing the April 2026 question number one. Paper. April 2026 paper, question number one. Thank you very much. So you see, like in our case here, using this method too, already we have the price. And the price, you guys gave me the price. You gave me a price of 120 minus 0.5 Q. So you gave me price is 120 minus 0.5 Q, like that. So we want to get MR, marginal revenue. So first, determine total revenue, which is our R. And we did say that to get R, we take price times quantity. Scroll, screen up, okay. Up to there. Or do you still want it to go up more? Yeah. So once you finish writing, yeah, please you should be able to tell me so that I can continue. Yeah, feel free to stop me. They call me the CPA Chief Ninja. Others call me the father of what here CPA students in East Africa. I will never feel bad because of any question. I will never feel bad because of you contributing. There are students who contribute and tell me, Mwalimu, your method is bad. We have a better method. And I'm able to listen. And at times, yes, I learn. I always learn. I always learn. I always learn. Even at this PhD level, I always learn from my students every time because there is nobody in East Africa, not even East, globally actually, who has got monopoly over knowledge. So you can learn even from a young baby, 3 years old. Or like anything to do with technology, including the technology that I'm giving you that I'm using today, I got it from my son. My son who is in grade 9. Told me, Dad, why should you keep on standing when you are teaching? You can teach when you are seated down. There is this technology. So first, determine. Yes, Ruth. I can see Ruth writing there MR equals. Maybe Ruth wants to make a contribution. We're asking MR equals question mark. MR equals what is the marginal revenue? So to get that, first determine total revenue. And to get revenue, we did say it's price times quantity. So our revenue will be equal to 120 minus 0.5 Q. And then in this case here, times what here, times this Q. This is our price times Q. If you forget this bracket, you get a 0. You see the price itself has got many terms. This price many terms are the ones you're putting in brackets times Q. So our R then, if I open brackets, it will be 120Q because you're distributing this, minus 0.5 Q squared, like that. We want to get marginal revenue, of which you have said marginal revenue equals dr over dq, meaning dr over dq, you are differentiating the revenue function, which I would expect you to differentiate for me. Let me give you 1 minute. You try getting this revenue function, and then we get to compare answers here. And this class, by the way, I've loved you guys. You are asking questions, you're giving me answers. I will be able to also come in like every Sunday to teach you a revision class. I've really loved this class. This is a good class. All right. So when they differentiate, of course, here we have an implied 1. When it comes down, it will be 120 Q raised to 0 because we must talk of new power. Yeah, Q raised to 0, I will not write that. Minus, bring this 2 here. 2 times 0.5 is 1. You see, 1 is supposed to be silent. 1 is supposed to be silent. Don't say minus 1Q unless you are doing it as a working. So minus Q. Thank you so much. That is the marginal revenue. You can see all of you got it right. So now we have gotten the marginal revenue. We want to get marginal cost. So next, derive marginal cost from total cost function. So our total cost, what do we have there, ladies and gentlemen? Our total cost, remember we have this total cost somewhere. Oh, yes. Ooh, we do. The total cost is supposed to be here. Total cost is supposed to be here. The total cost is supposed to be here. Total cost is supposed to be here. Are you able to see the total cost? Total cost is supposed to be here. 3,000 plus 30Q plus 0.1Q squared. 3,000 plus 30Q. That's our cost. Let me just see again. A 1,000 plus 30Q plus 0.1Q squared. You see now, after you've derived this from stock, so this is the total cost. So derive marginal cost. So marginal cost is DC over DQ. Let me see whether there's anybody who will be able to differentiate that for me. Thank you, Maureen. Thank you, HK. Really so very impressed with you guys. I mean, you're marvelous. You are 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 marvelous. Thank you. All right. So they're telling me, Mwalimu, this one, we are following you very nicely. We are following you very nicely because here now, here now, what we know that this is a constant, isn't it? We know that this one is a constant. Constants, they always disappear. This is static Q, but there is a raised to power 1. So when you bring this one down, it becomes 30 Q raised to a new power. How do you get new power? Take the old power minus 1. Right? Plus this 2 comes down. So 2 times 0.1, that gives me 0.2 Q like that. You see, then this one here will be 30 Q raised to 0. And we've just said that we shall never write Q raised to 0, so it will be 30. So 30 plus 0.2 what here? 30 plus 0.2 Q like that. So that is our marginal cost. You're very right. You need to go there. And I mean, pat up yourselves at the back. You're doing a very marvelous job. Now, ladies and gentlemen, from there, we know one thing for sure, that at maximum profit, marginal revenue will always be equal to marginal cost. At maximum profit, marginal revenue will always be equal to marginal cost. So this will be 120 minus Q equals marginal cost, which is 30 plus 0.2 Q like that. So at maximum profit, marginal revenue will always be equal to marginal cost. So put like terms together. You can decide to take this here. So it will be 120 minus 30 equals 0.2 Q. This now to go to the other side, plus Q like that. 120 minus 30, this gives me 90 equals 1.2 Q. So therefore, Q will be 90 divided by 1.2, which will end up giving us what figure? 25, which is very, very similar to what we got up there. So this is the quantity which will maximize profit, the same quantity. And now you can go ahead and get what here? You get the price. Personally, not unless I'm really forced, I don't use this method. Not unless I'm really forced. You know, there are situations where you are forced to, you're given marginal cost, you're given marginal revenue. That is the only time I can use this method. Otherwise, I prefer the earlier method because of this reason. I prefer the earlier method because of this reason. You can see number 2. They want us to compute the level of profit at this level of what here? Output. You see, when you use this MRMC, you don't have the profit equation. You still have to go back and start deriving it. But if I used the first method, I already have the profit equation, don't I? I have it. I have it. So I already have this profit equation. We got it somewhere. We got it somewhere. Oh yes, we got this profit equation somewhere. This equation here. Got it. So this equation, ladies and gentlemen, I'm now answering Roman 2 of this question, where they want me to give them the profit, the maximum profit itself. So now I'm answering Roman 2. So Roman 2, what they want me to do. So for Roman 2, they want me to give them Roman 2 maximum profit. So basically here, substitute. For Q equals 75 in the profit equation. And my profit here will be 90 times 75 minus 0.6 times 75 squared minus 3,000. So is there somebody who is able to give us this figure? So Mamu gives me a figure of 375. Optimum monthly input mean had it been asked. Okay. So you see, for example, here, I would really want to know the context there, because at times the optimum could be in the form of what here, could be in the form of minimizing cost. I want to see the question itself. But of course, the word optimum, it's either you're maximizing profit or you're minimizing cost. It could either be that maximum profit you're asking or minimizing what here, cost like that. All right. So we have been able to answer Roman 2. So Roman 3, thanks for that question. I would want, if it's a past paper question, please DM, send it to us here, and then I'll be able to interpret for you from a point of knowledge. Now, my very good students, please listen. 3, advise the management on whether producing at the profit maximizing output is feasible given the firm's production capacity. Remember, we are told that they cannot produce more than 15,000 units per day. Due to space limitations and machinery capacity, the firm cannot produce a maximum of 15,000. The firm can produce a maximum of 15,000 per day. But you see, as we are recommending 75, 75 is within capacity. Is within capacity, and therefore it is practical. It is practical. Our machines will be able to, it is practical or feasible, or feasible, or feasible. It's practical, it can be done. However, business-wise, this will mean a lot of idle capacity. But imagine in this case here, our maximum potential is to produce 15,000. And then you tell us just to produce 75. It's feasible here. We agree. It's feasible because we will not be overstretching our machines. We'll be within the capacity of our machines. But ladies and gentlemen, at the end of the day, we shall really be very, very idle. But because the examiner was not testing you on idleness, the examiner was testing you on feasibility. As what we do, this 75 is well within our 15,000 maximum capacity. So yes, you can decide to work with that. It's feasible. It's practical to produce that. So ladies and gentlemen, indeed, we have done this question number 1. It has been a pleasure. It has been a pleasure. It has been a pleasure hosting all of you. Yeah, it has been a pleasure hosting all of you. It has been a pleasure hosting all of you. Repeat question number 2. Question number 2 was about what? Yeah. Question number 2, what was it about, Kevin? Kevin, is it possible, because I'm supposed to go to another class which was supposed to start at 9, is it possible I upload this video and then I get to share a link with you? You try watching it. I would have loved, but there is a class that I'm quite late for 10 minutes. They're waiting for me. So it has been a pleasure, in this case here, teaching you this morning. I'll be looking forward to teaching you another day. But again, most importantly, let's ensure that we make RCM a household name for matters of CASNEB. For matters of CASNEB. Matters of CASNEB, RCM should be number 1. Be our number 1 brand ambassadors outside there. And of course, when you see this, I'm going to upload this video on YouTube. Joshua Aura on YouTube. Joshua Aura on YouTube. Yeah, please, if you get it there, ensure that you're commenting and then you are sharing. You really become my friend. And remember, Dr. Aura runs, rather is the principal at RCM. I also run Aura and the Company, which is an auditing firm based at Haven Scott, Westlands. So later on, you guys will be coming to me for attachments and, of course, exposure to the industry. By the time you're coming for that exposure into the industry, ensure that you have been able to expose our farms and our college through proper marketing. Otherwise, our phone number is 0793 555 000. Bye-bye. All the best. Yes, Jacqueline, if you bring me so many, we can sit down and get to do what here, get to talk. Otherwise, be blessed, big time. Have a good day. I will share the recorded videos. Yes. Have a good day. Bye.